All right, so let's dive into this world of Indian healthcare distribution. Entero Healthcare Solutions. We're going to be dissecting their Q3FY25 earnings conference call transcript, trying to get a sense of where this company is headed, what kind of risks are they facing. Really fascinating story about a company that's aiming to transform this massive market.
Yeah, and it's a really interesting one. And you're right, we're not just looking at numbers here. It's about understanding like the strategic moves Antero is making to really become a major player in this Indian healthcare distribution landscape.
So maybe we can start with just how big this market is that Entero is trying to kind of, conquer.
Well, I mean, the Indian healthcare distribution market right now, it's valued at a whopping $33 billion. And it's highly fragmented, right? So you've got a lot of these smaller players, and Entero sees this as a huge opportunity to consolidate and become this dominant force.
Yeah, and I mean, they've got a network to kind of back that up, right? I mean, reading through the transcript, just the sheer scale of their operations was pretty striking.
Oh, absolutely. Entero, they have a network of 104 warehouses across India. Think about that. That gives them access to over 86,200 retailers. So it's this massive reach that allows them to connect, healthcare brands to customers all across the country.
It sounds like they're really trying to be like the one-stop shop for, everyone in this Indian healthcare market. I mean, are there any downsides to that kind of strategy, though? Like, could it stifle competition? Could it limit choices for consumers in the long run?
I mean, that's a great question, and it's definitely something, that we have to keep in mind, right? Because while consolidation can bring, efficiency and things like that, it also has the potential to, like you said, stifle that competition. And then you get a situation where you've got these, handful of large players that are kind of controlling the market, and that can really impact, pricing and product availability for the everyday consumer.
So it's kind of a delicate balance to strike. The transcript mentions Entero's pursuing growth on kind of two fronts, right? Organic and inorganic. Can you break those down for us a little?
Yeah, so organic growth, think of it like, expanding the existing business, right? Reaching more customers in their current markets, and then maybe even adding new product lines. It's that kind of growing from within, right? And then you have inorganic growth, which is, going out and acquiring other businesses to kind of like expand their reach more rapidly, boost their capabilities quicker.
So they're being pretty aggressive with these acquisitions. Just how many companies have they picked up recently?
Oh, just in FY25 alone, they've completed 10 acquisitions. So, we're talking about INR 792 crores in annualized revenue. That's a lot of growth that's coming from these acquisitions.
That's impressive. But I did notice the transcript also mentioned some delays in closing some of these acquisitions. Like, what could be causing those delays?
Well, it's hard to say without kind of getting more information, but, it could be a number of things. It could be rising valuations. It could be, increased competition from other players who are also starting to see, hey, wait, there's a lot of potential in this market. Or, maybe even some regulatory hurdles that they're running into. It's something to definitely keep an eye on because it could point to, some challenges in their inorganic growth strategy.
Definitely something to watch. Now, let's kind of shift gears a little bit and talk about technology. What's the role of technology in Entero's business? It seems like they're embracing it in a pretty big way.
Oh, absolutely. They're really leveraging technology to kind of like streamline all their operations and enhance, that customer experience. And we're talking about things like app-based ordering, for retailers, data-driven inventory management. So that way they can optimize their warehouses, right? And they might even be using, data analytics to kind of like personalize their offerings.
It's actually pretty interesting that they're not trying to monetize their technology platform as like a direct thing, right? I mean, a lot of companies would probably be tempted to, spin it off as a separate business.
Yeah, that's a great point. It kind of suggests that they're viewing technology more as like this core enabler for their business, right? Not necessarily as, we're going to create a separate revenue stream from this. They're focusing on using it to just, gain that competitive edge in their core, distribution operations.
Really operational efficiency through technology. What kind of impact is that having on their margins?
Well, it's probably contributing to the positive trend that we're seeing, right? Because both their gross and EBITDA margins have improved. And this could be because of a combination of factors, right? So it could be a better product mix. It could be that increased procurement efficiency we're just talking about. And then, of course, the economies of scale that they're achieving because of this technology platform.
It seems like their core business is doing pretty well. But, I mean, are there still risks and challenges that we need to consider? Like, what could disrupt Entero's plans?
Well, one thing that kind of stands out to me from the transcript is working capital management because, they're tying up a lot of cash in their operations and they're aiming to become operating cash flow positive in the next year.
Yeah, that makes sense. I mean, efficient working capital management is absolutely crucial, especially for a company that's growing as fast as Entero is. But how do they plan to achieve this goal? What are they specifically, what steps are they taking?
Well, they've outlined, a few strategies. So first, they're really focusing on optimizing their inventory levels, right? Making sure that they have, enough product to meet that demand, but not too much where they're overstocking, right?
Yeah.
And tying up all this unnecessary capital.
Yeah, it's kind of that classic balancing act, right? For any distribution business.
Yeah. Exactly. And then, they're also working on improving their collections process. So they're trying to get paid faster by their customers. And this is going to help them, convert those sales into cash more quickly.
And, I'm assuming on the flip side, they're negotiating better payment terms with their suppliers, right?
Yeah.
Trying to extend those payment cycles.
You got it. So by stretching out those payables, they free up more cash in the short term, right? So it's all about managing that timing of the cash flows to make sure they have enough liquidity to support all this growth that they're experiencing.
So it sounds like it's this multi-pronged approach, right? Yeah. To working capital optimization. But even with all these efforts, there's always that risk, of the unexpected, right? Some kind of disruption. And the transcript specifically mentions, the rise of this quick commerce as a potential threat. How could that impact Entero's business?
Yeah. So quick commerce, right? It's all about, ultra fast deliveries. And we're seeing it change consumer expectations across so many industries. And if this trend starts expanding, into that pharmaceutical market, it could really disrupt these traditional distribution models.
Imagine ordering your prescription, right? And having it delivered to your door within an hour. That's pretty compelling.
Oh, absolutely. But, it's not all smooth sailing. There are some big challenges for these quick commerce players in the pharmaceutical space. First, think about the regulatory landscape, right? It's pretty complex. You've got these strict rules around, prescriptions and handling sensitive medications.
And then just from a purely logistical standpoint, wouldn't they need this massive inventory of all these different medications to fulfill, all these diverse prescriptions on demand? It just seems like a major hurdle.
It's a huge hurdle. And you're right. It's not like, delivering groceries or household goods. The sheer variety, right, of medications and the need for proper storage, proper handling. It just adds all these layers of complexity.
So it sounds like while quick commerce, it's a potential disruptor, it's not this immediate threat. Entero still has that, significant advantage.
Yeah.
You think about their established infrastructure, right?
Yeah.
The relationships with suppliers, and that deep understanding of this particular market.
Right. They've got a head start. But, they can't afford to get complacent, right? Because the quick commerce landscape, it's evolving quickly. So Entero's going to have to adapt to kind of stay ahead of the curve. And that might mean exploring partnerships with these, quick commerce platforms, maybe investing in their own, last mile delivery capabilities, or who knows, maybe even acquiring some of these existing players to gain that foothold in this emerging market.
It'll be interesting to watch, how they respond to this challenge. But let's shift gears again. Let's talk about Entero's private label strategy, right? Right now they generate a small portion of their revenue from private label products, but it seems like they see this as this potential growth area, right?
Yeah. And, their interest in managing that entire procurement process for hospitals, I think that could be a really key part of that strategy.
Yeah, the transcript mentions that they've actually received offers from hospitals to take over their procurement. Why would hospitals be interested in outsourcing that to Entero?
Well, hospitals are constantly under pressure, right, to reduce those costs, streamline their operations, and managing procurement in-house, that can be a very complex process. It's resource intensive. So by kind of outsourcing it to Entero, they can benefit from Entero's scale, their expertise, and their, negotiating power that they have with suppliers.
So it seems like a win-win, right? Hospitals, they get a more efficient process, and Entero gets access to this, large captive market for their products, including, of course, their private label offerings.
Exactly. It's a very strategic move, right? And it could really, really boost that private label business. But, there's some potential downsides that we have to consider as well.
Like what?
Well, think about it. If Entero's managing the procurement, right, for these hospitals, and then they're also selling their own private label products to those same hospitals, it kind of raises some concerns about potential conflicts of interest.
Yeah, I mean, are they prioritizing their own brands over others, right? Are they offering fair pricing to these hospitals? I mean, these are some pretty important questions that they're going to have to address in a transparent way.
Absolutely. Transparency and those ethical considerations, I mean, that's going to be paramount if they want to gain the trust of the hospitals and, of course, the regulators.
Now, let's dive into, some specifics from the earnings call transcript. The analysts, they really asked some pretty pointed questions about Entero's financial performance.
Yeah, and one of the key areas of focus, unsurprisingly, was their working capital management. That's what we were talking about earlier, right? They really wanted to understand, how Entero is planning to achieve that goal of becoming operating cash flow positive next year.
Yeah, what specific metrics did they, highlight?
Well, they said that their net working capital days stood at 69 in Q3. So that basically means, it takes them roughly 69 days to convert those investments, in inventory and other current assets into cash.
So yeah, they've got a lot of cash tied up in their operations. What steps are they taking to improve this?
Well, they highlighted three main areas, right? So optimizing inventory management, that's number one. Then you have accelerating that collection of the receivables. And of course, we talked about this, negotiating better payment terms with their suppliers. So they're basically trying to speed up that cash conversion cycle.
Sounds like they're playing all the right livers. But, I mean, it's worth noting that managing working capital effectively, it becomes even more challenging when a company's growing this rapidly, especially through acquisitions.
That's a good point, yeah, because integrating all those newly acquired businesses, that can definitely disrupt existing processes, right? And create some challenges in managing those cash flows.
And the analysts also seem really interested in their acquisition strategy in general, right? Especially, whether that pace of acquisitions would pick up once they hit that positive operating cash flow. What was their response to that?
Well, they kind of push back on this idea that their acquisition strategy is only driven by, financial capacity. They really emphasize that they're being very selective, They're focusing on acquiring businesses that align with their, strategic goals of expanding geographically or adding those new product segments.
So it's not just about, hey, we have the money, let's spend it.
Right.
It's more about, let's find the right targets that fit into our long-term vision. But, I mean, given how ambitious their plans are, it seems pretty likely they'll stay active in that M&A market.
Yeah. And they did say that they've got a pretty robust pipeline, of potential acquisitions. And they've got enough funds to, maintain that similar level of inorganic growth for the coming year.
So yeah, they're not planning on slowing down anytime soon. Now let's talk about their technology platform, right? One analyst was kind of curious about its scalability and whether Entero would, potentially monetize it as this separate business.
And their response was pretty interesting. They basically said, we have no plans to monetize the platform directly. They see it as this core part of their business, right? It enables them to improve efficiency, enhance that customer experience, and really gain that competitive advantage.
Yeah, that's interesting. It suggests that they think the real value of this platform isn't in generating this like standalone revenue, right?
Yeah.
It's in how it strengthens their core distribution business.
Yeah, exactly. And they did highlight the platform's scalability, right? They said it can handle a lot of growth, in terms of the number of hospitals, manufacturers, and retailers that they serve. And they said that they're constantly investing in, new features and functionality to make it even better.
So it's this dynamic platform that's constantly evolving. Now, remember that point about Entero potentially, managing that entire procurement process for hospitals.
Oh, yeah. That was a hot topic during the earnings call.
Yeah, the analysts, they were really interested in how that would impact, Entero's private label business, right? And whether it would create any conflicts of interest.
And Entero basically confirmed that they are, actively thinking about this strategy. And they're already getting those offers from hospitals to manage their procurement. And they see it as, potentially a game changer, right? For that private label business, because it gives them this huge new channel for their products.
But they did acknowledge, the potential for ethical concerns there.
They did. They emphasized how important transparency is, right? And fair dealing. They're going to have to prove that they can manage these potential conflicts of interest effectively if they want to earn that trust, from hospitals and the regulators.
And that strategy, it could really change the competitive landscape, right, of the Indian healthcare distribution market. If Entero becomes the primary gatekeeper for for hospital procurement, it could give them this huge advantage over their competitors.
It's true. It's definitely something we're going to want to, keep an eye on and see how it all plays out. Now, one other question that I thought was really interesting was, one analyst asked about those long-term incentives for the entrepreneurs who sell their businesses to Entero.
Yeah, especially now that Entero is a publicly traded company, right?
Yeah.
They can't really offer equity as part of the acquisition deal.
Yeah.
So how do they make sure those entrepreneurs are still engaged?
Right.
And motivated after the acquisition?
And what Entero said was, in these recent deals, they haven't been acquiring 100% of the businesses. So they're taking a majority stake, but typically 70 to 80%, with an option to buy those remaining shares later on.
That's a pretty clever approach.
Yeah.
It lets the entrepreneurs, keep some ownership and participate in that future growth alongside Entero.
Exactly. And it seems to be working because Entero said that, most of the entrepreneurs that they've acquired businesses from, they've actually stayed on post-acquisition.
That's a good sign. I mean, it sounds like they're creating this win-win, right? Where both parties, they benefit from the acquisition. Now, before we, wrap up this part of the deep dive, I kind of want to circle back to that potential impact of Entero's growth on just the healthcare landscape as a whole in India.
Yeah, it's definitely a complex issue. It could have some really far-reaching consequences.
On one hand, their focus on this consolidation and efficiency, it could lead to, lower costs for consumers. It could improve access to those healthcare products, especially in underserved areas.
Right, but you also have that risk, right? That their dominance could stifle the competition, limit those choices, and then potentially even lead to higher prices in the long run.
It's that classic dilemma, right?
Yeah.
Efficiency versus competition. It's going to be really interesting to see, how it all plays out and how the regulators kind of respond to these evolving market dynamics. Yeah, it's a fascinating case study for sure. Raises a lot of questions about the future of healthcare distribution in India. But before we get, too far into those broader implications, I want to circle back to one specific detail from the transcript that kind of jumped out at me.
Oh, which detail is that?
The analysts were really interested in Entero's other business segment. It includes their private label business and also their sales. And, they kept pushing for a more detailed breakdown of that segment. But Entero's management, they were pretty reluctant to give specifics.
Yeah, they basically said that most of their contracts with healthcare companies, they combine those marketing and distribution rights, right? So it makes it hard to really separate the two. It kind of suggests that their business model is pretty integrated, marketing and distribution, they work really closely together.
It makes you wonder if they're, maybe intentionally keeping this segment, kind of vague, right? To maintain that flexibility in how they allocate their resources and report their financials.
It's possible, but they did say that their marketing services, even though it's a smaller portion of their overall revenue, it generally does have a positive impact on their margins.
So it could be a strategically important part of their business, even if they're not ready to, to break it out in detail just yet. Another point that came up during the call was the EBITDA margins of their acquired businesses. The analysts were curious about how those margins compare to, to Entero's core business.
And what Entero said was, they don't really classify their acquisitions as like scaled up or not scaled up because they're always working to integrate and grow, all those acquired businesses.
So they're not judging them on that initial performance, right? They're taking this long-term view and focusing on optimizing each acquisition, over time.
Exactly. They said their goal is to scale up all of their acquisitions, no matter what their initial size was or market share, to really, unlock that full potential.
And they think that scaling up all these businesses will let them implement, more favorable credit policies.
Yeah.
And really improve that working capital cycle.
Right. So it all ties back to that big goal of generating that positive operating cash flow.
Working capital management is a major focus for Entero. I mean, they're tackling it from all these different angles, right? Yeah. Optimizing inventory, speeding up collections, negotiating those better payment terms with suppliers.
And it's not just about, improving their financials. It's also about, positioning themselves for future growth, right? Both organic and through acquisitions.
Yeah. Stronger working capital position gives them more flexibility, right? To invest in those new initiatives, expand into new markets, pursue those strategic acquisitions.
Exactly. It gives them more options and makes them less reliant on external funding.
Now, before we wrap up this deep dive, I want to touch on one final point from the transcript. The analysts were curious about how Entero's acquisition strategy might be affecting valuations in the market.
Yeah, like, are they driving up prices by making so many acquisitions? That was kind of the question there.
Right, but Entero said, look, there's only a few organized players in this market.
Right.
And only one or two are really actively doing acquisitions.
So they feel like they still have a big advantage, right? Because of their scale, their expertise, and their access to capital.
It's a bold statement.
Mm-hmm.
But, you look at their track record. They might be right. Right. They've been really good at finding and acquiring these promising businesses, integrating them well, and then scaling them up to contribute to their overall growth.
Of course, the market's always changing, right? New competitors could always emerge. But, for now, it seems like Entero's in a pretty strong position to keep executing that strategy.
Well, that brings us to the end of our deep dive into Entero Healthcare Solutions. We covered a lot today. Their business model, growth strategy, financial performance, and, of course, those risks and challenges they face.
Yeah, it's a really complex and interesting story, and it'll be really fascinating to see how it plays out in the months and years to come.
Absolutely. Entero is definitely a company to watch, right?
Yeah.
And their journey, it's going to have a big impact on the Indian healthcare landscape. And as always, we encourage you to, go check out the source material yourself, consider those different perspectives, and really form your own conclusions about what Entero's ambitions could mean.
And if this deep dive piqued your interest, go out and do some more research, right? Stay informed about, what's happening in the healthcare industry, because it's a fascinating area.
That's it for today. Thanks for joining us on this deep dive, and we'll see you next time.